As Tesla's profit falls 71%, Elon Musk says he will spend less time in Washington. The carmaker reported the sharp decline in quarterly earnings after Tesla's brand suffered because of its chief executive's role in the Trump administration. Tesla's chief executive, Elon Musk, made the announcement on Tuesday that he would spend less time working for President Trump in Washington, after the automaker reported a 71% decline in profit in the first 3 months of the year. During a conference call with Wall Street analysts, Musk stated that he would continue to devote a day or two per week to Washington matters, probably throughout the presidency of Trump. The billionaire executive is one of Trump's closest confidants. He has led efforts to reduce government spending and eliminate tens of thousands of federal government jobs. His comments came less than 2 hours after Tesla said it had earned $409 million, down from $1.4 billion in the first quarter of 2024. The company previously reported net profit of $1.1 billion last year, but revised the figure to reflect changes in the way cryptocurrency assets are valued. Sales of Tesla have been declining due to a lack of new models. Intense competition from Chinese automakers like BYD, and Mr. Musk's support for far-right causes, has discouraged some centrists and liberals from purchasing Tesla automobiles. Mr. Musk said recent protests at Tesla showrooms around the world were conducted by people who stood to lose government handouts because of his work with the Trump administration. He stated, "The real reason is that those who are receiving the fraud and waste want it to continue." Based on its stock price, Tesla is still the most valuable automaker in the world, and it sells more electric vehicles in the United States than any other company. However, investors have become increasingly pessimistic about the company's prospects and concerned about since the middle of December, causing its shares to lose approximately half of their value. The role Musk plays in the Trump administration. The earnings were well below Wall Street expectations. If Tesla had not earned $400 million in interest on cash and investments, and $595 million from selling credits to other automobile manufacturers who failed to comply with emissions regulations, Mr. Trump has pledged to eliminate. After the company released its quarterly earnings, Tesla shares gained about 4% in extended trading. "This is the worst performance I've seen in Tesla's history," Ross Gerber, the chief executive of Gerber Kawasaki, an investment firm, said on X. As is customary, Tesla refused to provide a forecast for profits and sales for the remainder of the year, citing excessive economic uncertainty. In a shareholder report, Tesla stated, "It is difficult to measure the impacts of shifting global trade policy on the automotive and energy supply chains, our cost structure, and demand for durable goods and related services." In a possible indirect acknowledgement of the harm that Mr. Musk has done to Tesla's reputation, the company referred to changing political sentiment that it said could have a meaningful impact on demand for our products in the near term. Tesla has steadily lost market share to Chinese carmakers and more established automakers, like General Motors, Volkswagen and Hyundai, that have been offering a growing selection of electric vehicles. Mr. Musk's company once hoped to sell 20 million vehicles a year by the end of the decade, twice as many as Toyota. However, sales have decreased since reaching 1.8 million in 2023. Last year, the company sold 1.7 million cars, and its global sales fell 13% in the first quarter of 2025 from a year earlier. The Cybertruck, Tesla's newest vehicle, which consumed a lot of the company's resources while it was being developed, is looking increasingly like a flop. According to Cox Automotive, a research company, Cybertruck sales in the first quarter were about 50% lower than in the last 3 months of the year. Cybertrucks in Tesla's inventory have recently been discounted by as much as $8,500. On the company's website, before federal and state incentives, the truck starts at $70,000. The automaker reiterated that it would begin producing a lower-cost vehicle by the end of June. That would make it possible for more people to afford an electric vehicle and potentially revive sales. However, the business hasn't shown off a prototype or said much about the car. Analysts doubt whether the new vehicle will be available in significant numbers anytime soon. Additionally, it is unclear whether the vehicle will be entirely new or merely a modified version of Tesla's Model 3 sedan or Model Y SUV. Tesla said Tuesday that the vehicle will utilize aspects of the next-generation platform, as well as aspects of our current platforms, and will be produced on the same manufacturing lines as our current vehicle lineup. Mr. Musk has become a lightning rod because of his position at the federal office, known as the Department of Government Efficiency, which has reduced the budgets of federal agencies and eliminated thousands of jobs. Activists have protested outside Tesla dealerships around the world, and Tesla vehicles have been vandalized or even burned. Tesla is probably less vulnerable to Mr. Trump's tariffs on autos and parts than other carmakers, because its factories in California and Texas make all the vehicles that it sells in the United States. The company also has car factories in Shanghai and near Berlin, which serve much of the rest of the world. But Tesla will also suffer. Its factories in the United States make use of parts that are brought in from China and Mexico, and will be subject to tariffs. This will force the company to raise prices or lose money. Mr. Musk has said the company's future is in artificial intelligence technology that will allow Tesla vehicles to drive themselves without human intervention, enabling fleets of Tesla cybercabs to make money ferrying customers. However, Tesla faces competition from a number of Chinese companies and Waymo, a subsidiary of Alphabet, the parent company of Google, in this emerging market because the technology has not yet been perfected. Waymo's autonomous cars have offered paid rides for several years in Phoenix and San Francisco, and are expanding to more places. Waymo announced plans to expand to Washington last month, and stated that it was completing approximately 200,000 paid rides every week in 4 cities. Tokyo is also where it is testing its vehicles. Analysts question whether Tesla's self-driving cars will ever bring in the trillions of dollars that Mr. Musk has said they would. In 2024, Uber, which has been providing paid rides for 15 years and is collaborating with Waymo in Austin, Texas, reported a revenue of $12 billion.